Hello everyone and welcome to today's morning market. So I'm going to focus on the US stock market, touching new highs, and also yesterday's US unemployment figures. Okay, so let's dig into the details. So as I said at the start, the US stock market, so that's the main stock market, but also the more technology focused stock market index, both touched new highs yesterday. So what you saw is Nvidia, the technology company, lead the way. So that was up 5% on the day. And actually the valuation of Nvidia has now surpassed Apple. So Nvidia's worth $3 trillion. And just to put that into context, that's the equivalent of UK GDP for 1 year. But let's also think about what else happened yesterday. And we saw the US unemployment figures come out, and the unemployment figures are really important because central banks will look to these figures to give them an idea of how hot or how cold the labour market is, to help them understand, can they adjust interest rates, the trajectory of interest rates from here. So let's have a look at the figures. So yesterday we saw the ADP report, so the payroll report released in the US. So the figure was 156,000 jobs were created in the private sector last month. But to put that into context, the previous month was 188,000 jobs were created. So it was lower than what we'd seen previously. And this was also below economists' expectations. So expectations were for a figure of 173,000. But what can we take from that? Well, actually, stock markets performed well on the back of that data. And the reason why they performed well is because it's a signal that the job market is cooling down from the previous quite hot job market that we were seeing overall. So we actually saw a rally in equity markets, and that's because investors were considering that with a slightly cooler job market, there's potential for interest rates to come down in the US. So what do we have finally later today? So today's a really important day. So we have the European Central Bank. So they will announce their interest rate decision today. And the reason why it's important is because they are expected to cut interest rates. So the expectation is that interest rates will be cut by 0.25%. So this will be the first time that interest rates have been cut in Europe since 2016. And it's also Europe, if it happens, will be the first central bank to cut rates. Therefore, it sets a signal, it sets a tone for other central banks, particularly the UK, and then maybe a little bit further out, the US. As always, we'll report back to you tomorrow with our Week in Markets video. That's everything from me. I hope you enjoyed today's video, and I look forward to speaking to you soon. Thank you.